Ladies and gentlemen, please let's give a warm welcome to Dr. Mark Dotzour.
Thank you, Nestor. Let me get this presentation up here. It's always tricky to do something in front of 500 people. It's amazing how challenging things feel. Thank you. It's good to be here in Wichita with y'all today. I don't know if you noticed it or not, the wind was blowing a little bit today. I love living in Texas and playing golf because it gets blowing about 15 miles an hour and people get all excited about that. It's like, man, this is a breeze. It's just a gentle breeze. It's fun to see all the stuff going on in Wichita. It's fun to see downtown Wichita really moving and really changing. That's really encouraging to see. The title of my presentation is Playing Ball in the Later Innings. About 6 months ago, along about the middle of the year, people started coming up to me after presentations and saying, hey, what inning are we in? And after about 3 of those experiences, I thought, I'm just going to start putting this in my presentation again. When businessmen and women say, what inning are we in, what they're asking is, how long is it before we have a recession, a normal recession? You see, we live in a country that operates under a capitalistic economic system. It's called capitalism. And at least as long as 11 of the 12 presidential candidates get elected, we're going to continue to be in a capitalistic system. I've found that there's something like, well, I was up in Des Moines, Iowa 3 days before the caucus, and all those people, that's all they want to talk about was politics. And they had Jim Carville and his wife, Mary, whatever her name is. They were the keynote lunch speaker, and everybody's all excited about that. And I just said, you know what, I'm not interested in this at all. I said, in fact, you people in Iowa here, we got a little education problem here because I just read, and I'm not a Democrat, and I'm not a Republican, so you can just relax. It's just a fact. All I like to talk about is facts. Des Moines Register says 43% of the Democrats that say they're going to vote identify themselves as socialist. I mean, it's largely kids under 30 years old, and it's like, I told those people up there, I want you to give them my home phone number so I can call them and then tell them how stupid they are, okay? Socialism is a disaster. Capitalism has all kinds of problems. Capitalism is ugly. Capitalism has been defined as the vortex of creative destruction. Every day is a businessman or woman in a capitalistic system. You're either stealing market share from somebody else or they're stealing market share from you. That's how it works. You know why that's good? Because you have a chance to win in that environment. In socialism, I own all of your companies and I tell you where to work and what you can do. If you know a 30-year-old that thinks socialism is a good idea, just have them picture me being the socialist boss and I own it all. And you go to Target next year and you look in the big store at Target and you go to Costco and you go to Walmart and you see the same thing. Row upon row upon row of tractor tires. That's it. Because my cousin runs the tractor tire operation. And for you women that want a new fragrance this year, the fragrances are in back behind the tractor tubes, and the fragrance is essence of tractor tire, okay? That's how socialism works. It's a disaster. It's a shame. I'm ashamed that our country even thinks about this stuff. If I had 7 guys or gals from the Soviet Union here, or from Bulgaria, or from Hungary, or these places that were just punished and just destroyed by socialism and communism, they would be up here saying, you're way too weak, boy. Tell them the truth. Tell them the truth. So anyhow, with that said, how long are we in this ball game? You see, in socialism and communism, you don't have ups and downs. At least you try not to. You just dictate what it's going to be. In capitalism, you go up, you go flat, you have a recession, you go down, you do it again. And that's how we make a living. You make a lot of money on this side, you try to avoid getting destroyed on the downside and have some fresh powder so you can come back in and do it again. That's how you thrive in a capitalistic system. I personally think we're in about the 7th inning or so. We're not in the 3rd inning anymore. I think we've got a couple of years left to go. Many of you know, as an economist, there is a 50% chance at least that everything I say is wrong. I've told you that for years, and it's still true. Again, you could have got Bernanke here, but his odds aren't even 50-50 anymore. So, but his fee's pretty big. So with that said, I wanted to do a little homework. So the average expansion in America since the war was over in 1945 is 58 months. That's why people are starting to ask me, how long does this last? Because as we sit here today, we're in 80 months. So we're past the average. Makes sense. Now with that said, we've had expansions that have lasted up to 120 months. They just don't stop because the time's up. They stop. You have an economic recession in America when everybody wakes up one morning and goes, you know what, I just bought a house last year. You know what, I bought a car and a truck in the last 18 months. You know what, I just put new carpet in I just got an iPhone 6. I got an iPhone 7, and I got 4 Fitbit watches too. I mean, I'm waking up today, I got nothing I want to buy, and we don't. And then what happens is the factories start slowing down and they lay off people and you have a recession, and then you wake up one day and people go, my car's old, my Fitbit doesn't work anymore, at least I'm 8 pounds higher and it's lying to me about it. Or I don't even have one, obviously you can tell. I don't have a clue what I'm talking about with Fitbit. But anyhow, it's normal. They don't happen because of time. They happen when the American people run out of energy to buy things. That's why I don't think we're done yet. I'll try to support that with some facts for you in just a second. So that's one theme. What inning are we in? 7th inning, in my opinion. 2016 is able to look fairly decent in terms of job growth, maybe 2%. It's slower than we'd like, but that's how we roll in America. With the Congress that we have, with the president we have, 2% is a big deal. So that's just the way it is. And so I think we still got room to run, and I'll get into that in just a minute. The second theme, there's about 5 themes in this presentation, and the second one is the financial markets around the globe. Bradley referred to people wanting to buy real estate and how prices are going up and yields are going down. There's a reason for that, and the reason may not be going to go away in the next 12 months or the next 24 months. So even though he was talking about prices getting a record high and yields getting kind of record low, I think there's room to run there. There's reasons why that happens, and those reasons are still in place. And one of them is the story I'm going to describe to you now. My grandfather was the first principal at North High School when it opened in 1921, and was principal at Roosevelt prior to that. And he was an English teacher, and my grandmother was. So I hung around words a lot as a kid. And this word came to me about August last year. So I was reading about the global financial markets. I had to double check how to pronounce it. Chimera is actually the way I guess you're supposed to say it. The definition of that is something that exists only in the imagination and not possible in reality. And this describes a whole bunch of the financial markets across this globe. And it's why people like owning real estate. An apartment building doesn't lie to you, okay? A shopping center doesn't lie to you. You own those things, you get some cash flow out of them. Chimera. Let me give you an example, kind of an easier to understand example before I get into the financial markets, which is what really matters. This would be my chimera, that I could win the Masters with my 18 handicap. That'd probably happen, okay? No matter what I do, it ain't going to happen. Nobody cares if I win the Masters or not. Nobody in this room thought I would win the Masters. It's irrelevant. But these next chimera I'm going to tell you about are highly relevant. And here's the first one, is the Japanese stock market. It's called the Nikkei. The whole country of Japan is a complete chimera. It's a complete fabrication here. Their economy's been sinking since the 1980s. They've decided to do quantitative easing with a new dimension. They're taking our playbook of print $4 trillion and buy bonds with it to make mortgage rates go to 3.7%. They're taking a new playbook because their economy is so much worse than ours. They need stronger medicine. So what they're doing is printing money and buying bonds and also buying stock with it. So how's that? The central bank is printing money to buy stock to make their stock market go up. Don't let anybody fool you that because the Japanese stock market has risen back to 20,000 last year, it's an indication that the Japanese economy is on the right track at all. It's absolutely not. And what gets scary is after a while, it's like the Wizard of Oz when they Toto pulls the curtain back, and I'm the central banker. I'm Janet Yellen, or I'm Mario Draghi from Europe, or I'm Mr. Kuroda in Japan, and I got all the smoke and mirrors out here, and they go, well, we at the Open Markets Committee, we've thought about this, and we're thinking about raising rates 4 times this year because we see a balance or an imbalance between inflation and job growth, all of that stuff that I've been paid to listen to over the years. And they act like they know what they're doing. But I'm telling you, printing money to buy stocks and bonds is not real. What happens when they decide to not do that any longer? What do you think will happen to the Japanese stock market and the Japanese economy when they decide not to do that? Just look at this. The Bank of Japan is purchasing ETFs to buy stock directly from the Nikkei. Here's the thing. So I'm buying all this, and you're out there going, I'm not sure I want to buy stock. I'm not sure I'm a Japanese citizen. I don't know if I want to buy stock. What if you change your mind and don't sell? Well, I found this. I love reading the Wall Street Journal. The smaller the articles, the better. The smaller the font, the meatier the information is. I love that. Have you seen The Big Short? There's that guy with the bad eye, and he doesn't want to go out anywhere, and he loves spreadsheets. That's me. I got good eyes, but the rest of it, that's me. I didn't see the movie. I read the book. I thought, I can identify with that dude with the bad eye. I like reading fine print and making spreadsheets too. And so you can feel good about Japan right now because Kuroda has promised not to sell stock till March of 2026. I mean, what a joke. Oh, and then he says, I'll purchase $656 billion in assets every year as long as needed. You see what he's saying? My country is so dead, it's so on its back, it has no hope for the future. I'm going to print money and buy stocks and bonds as needed forever, and I won't sell any of them till 2026. It's a complete fabrication. Their bond market has been distorted beyond recognition. Instead of labeling my presentation playing ball in the later innings, what I really wanted to call it was Botox gone bad. Okay? But I started Googling images, Botox gone bad, and that was not good. I couldn't find any of them to put on TV, on my show, okay? On my show, listen to this. On my presentation. See, I'd never make it at the Federal Reserve. I call mine a show, you know? It's like, whatever. I don't want to be on the Federal Reserve. I like telling people the truth. I think it's really fun, okay? Now, and I speak with Federal Reserve people all the time. They just go, well, you know, he's a little noisy, but factually he's pretty accurate. But here's why Japanese people want to buy real estate here. This is what happens when your government prints money and buys bonds. What kind of yield? Okay, so what was the yield? 5% or sub 5? 4.5 on a freestanding something here, okay? A Japanese person could look into that and go, well, hey, I can invest in a 2-year bond and get a minus 0.25%, or a 5-year bond and get a minus 15 basis points, or I can buy a 10-year treasury bond and get 0.02% interest every year for 10 years. All of a sudden, that triple net lease here in town starts looking really good with a 5% return. This is what's happening. These people are distorting their financial market beyond recognition, and Japanese people have a lot of money, and their pension funds have a lot of money, and they don't want to invest in their stock market unless they make them, and they don't want to buy bonds here, and they're encouraging their citizens to buy real estate in other countries, and guess which is the favorite country to be buying real estate right now? That would be here in America. That increase in price and decline in yield that Bradley was referring to is going to continue until there's some other place to go. You tell me when there's another place to invest in besides the United States of America in real estate, and then I'll say that will be the end of this price cycle. And I'll do that here. Nestor's not afraid of me to tell the truth. I've had people come up to me afterwards in 09, 010, or 10, and say, you know what? You're still kind of funny, but why is it that every time I hear you anymore, I want to take a warm bath with a glass of red wine and a razor blade, okay? That was the kind of compliment. That was the compliments I was getting back then. So I don't mind pitching real estate when it's pitchable, and I won't when it isn't, but it's still pitchable. 85% of my retirement account with TI Craft is still in commercial real estate. And it's going to be there until someplace else is more attractive. And it's not right now. Certainly not here. Here's another chimera, China, the Shanghai index. That communist dictator over there, whatever his name is, decided we want the citizens of China to own stock. I think Karl Marx got to be rolling over in his grave. It's like, wait a minute, communists encouraging people to buy stocks? This is just not supposed to happen, okay? But so they encourage all these Chinese citizens to buy stock. Look what happened to the index. It skyrocketed. And Chinese dictators are used to telling you what to do. We're going to grow at 10% a year. We have a 10-year plan to grow at 7% a year. Well, stock markets, Lee Trevino had a saying that the reason he liked to hit a fade was because he said that, you know, you can talk to a fade, but a hook won't listen. And if you know anything about golf, I've talked to a few balls going out of bounds at Clapp Park in the middle of the summer. Stop! And they just roll right out of bounds. Well, if you're a communist dictator, stock markets don't listen to you any more than a hook going out of bounds on Clapp Park in July. And so it drops 30%, and so what do they decide to do? What do you suppose they decide to do? Print more money and buy stock, right? Because that's what smart central bankers do. This is what I'm worried about, is our people in Washington, D.C. will start doing this too. This is just amazing to me. Then this guy, it's not just two people. It's not a duet. This is a trifecta here, because it's not just Japan, it's not just China, it's Europe too. This is Mario Draghi. Here's his deal in Europe. I can help, I'm paraphrasing what he would say. Hey, I can help countries that are heavily in debt by loaning them even more money. Okay? That doesn't work either. It isn't working either. So what is he doing? Printing money and buying bonds. Okay? That's the new game plan. Make interest rates go below zero. That's the new game plan. It's a failure. I'm really worried about this. This is the biggest thing I'm worried about. If you saw me in 2006 when everything was going straight up for the next 2 years, I was out saying, I'm worried. I don't understand it, but Fannie Mae and Freddie Mac are not filing quarterly statements with the accounting people, and they should be delisted from the New York Stock Exchange, and they're not. And I can't find out what's going on, but I'm worried about it. All right? Well, I don't know what's going on right now, but I'm really worried about these central banks making interest rates go below zero, because how does a bank stay in business? You either make a loan to a business person, and there's not enough business persons that want to make those loans, and so you buy treasuries with them. And so what do you do when you buy treasuries and you get a negative yield on that? Oh, and then what do you do when the bank charges you interest on your reserves you have? This isn't going to work. You're going to have a bank that's getting charged for money they can't loan out. They're getting negative yield on treasuries that they're buying. I don't see how they stay in business. And these people are acting like they're going to do it here in America. For the life of me, I can't fathom this. So here's what they're doing. You know what his problem is? I like pictures. It helps to kind of just see who it is, just for fun. His biggest problem is, I may print so much money, I may run out of bonds to buy. Then what do? Look what's happening here. German bonds. If you're Deutsche Bank, you know, just the other day, bank stocks went way down the tank. Took some of our American bank stocks down with them, just last week. And Deutsche Bank and Credit Suisse were two of the leaders there. Well, look at what's going on there. Deutsche Bank, their 2-year government bonds give you a negative 0.5% yield. Their 5 gives you a negative 0.33%. 10-year gives you a 0.25%. And get a load of that. 30-year bond doesn't even give you 1% for a whole 30 years. Who wants to buy that? That's why that triple net 5% deal here in Wichita, boom, like liquid gold. Dutch, it's all over the place. Swiss, negative 34%, 34 basis points. Okay, so if you hear somebody say, well, I don't think I'm going to buy commercial real estate this year because, heck, cap rates are down to 5. I see that. I'm not going to buy. Just say, well, I'm with you. I understand that. I think you ought to go buy a 10-year Swissy at minus 34 basis points. I bet that'll work pretty good for you. I was in the finance department at the University of Texas for 5.5 years. I was a slow learner. Took me a while to get out of there. But in 5.5 years, I never heard the phrase negative interest rates. I didn't even know how to do them on my calculator, okay? And here's how it works. You buy a bond for $1,100. You get nothing on it for 10 years, and then you get a check back for $1,000. That's negative interest. That's how it works. It's very simple. It just took me a minute to figure it out. It's just so weird. It's Botox gone bad. That's all there is to it for all kinds of people. Now, here's our deal. We're not printing money and buying stock yet. And I hope we don't. But here's something that's pretty weird in our country too, is all these companies in America, what are they doing? Are they spending money to buy businesses? Are they expanding money to do research and development, expand, train, all of that cool stuff? No. The S&P 500, this is the information that I got out of this, the S&P 500 are buying back stock. What does that mean when a CEO buys back stock? I'm your CEO, you're all the stockholders, you invested money with me. I'm IBM, we'll say, we'll make that up. I'm IBM CEO, you're stockholders, you invested money with me because I know cool people and we know technology and we're going to take your money and invest it, make you a lot of money, and that's why you're there. I'm at a stockholders meeting. And I say, you know what our big plan is for this year is I'm going to buy back your stock. What that means is I'm giving you my money back. What that means is I have looked at the investment horizon all over the earth. I can't find anything to invest money in, and so I'm going to give you your money back. And these companies all over America are buying back stock. You just see it over and over and over. This one I want you to look at, just the red line in this. This is the percent of stock buybacks to net income. What this means is how much of the company's income, profit, net income is another way of saying profit on Wall Street. How much of their net income are they using just simply to give it back to you? And you see that number? You see how it's increasing? That number is above 60%. So 60% of the profits in the S&P 500 is going to what? Back to you, saying, you invest it. You go buy a Swiss 10-year treasury for minus 30 bips, okay? This is the, get a load of this one. This is the percent of people on the S&P 500, the 500 biggest companies in America. This is the percent of them that are spending more money than they have net income to buy stock back. My company earned $100 this year. I'm going to buy back $120 worth of stock. I'm buying back more stock from you than I made in profit that year. And so 130 of the 500 S&P 500 companies spent more than they made in profit to buy back stock. Why did they do this? Because their revenues haven't gone up, because their earnings haven't gone up. And CEOs don't get paid when their stock doesn't go up. So how you do that is you buy back stock. You have less stock, the earnings per share goes up. It's a chimera. And you think, well, okay, that's just smokestack. That's just like Arch Coal or somebody like that that's buying back stock. No, who would be the biggest stock buyback in the S&P 500? That would be Apple, okay? How much of their stock did they buy back? 5%. Apple bought back 5% of their shares last year. That's supposed to be our leader in technology in the future, all the cool stuff, Apple TV and all the rest of it. So something is not working here very well either, and how long will this continue to last? Because that's how, well, I think I've got another slide about this. I've showed you this for 3 years now. Nothing's really happened yet, but the margin debt on the stock market is still at record high. People buying money to borrow stock. It traditionally is 70 or 80% correlated, 78% actually, correlated that when margin debt goes up, stocks go up, and when margin debt goes down, stocks go down. We're at a record high right now. What will happen at some point is that margin debt will come out of the market, stock prices fall, they'll have to pay off their margin loans, and stock will have to be sold to pay off those loans. That's what happened in China when you have a 30% drop in 3 weeks, because the Chinese people had borrowed a lot of money too to buy stock. Here's the chimera part of America. I'm just giving you 3 examples, one back in August of 2011 to show you how long this has been, how pervasive this is. But each of these 3 stories says, stocks went up today because financial news was bad. The economy news was bad and the stock market went up. Why is that? Because if we think our economy is going to be bad, what do we think is going to happen? The central bank will print money just like Europe and the rest of them. Our stock market has been going up every time there's bad news for the last 4 or 5 years because we are addicted to the Federal Reserve. And so the Federal Reserve just says we're going to raise interest rates 0.25% in December. And I'm saying, oh, that's nothing. They can raise 1/4 and 1/4 and 1/4. That's nothing. And they raise it by 1/4%, and our stock market goes down about 11% in a month. That shows you how overvalued our stock market is, that it's so addicted to interest rates being at 0. It can't even tolerate 1/4%. It's unbelievable. Oh, and then here, this slide I thought was interesting. I want to bring this to you, because here's another thing I kept hearing was, what if China ever stops buying our bonds? We're going to be in real trouble, because if the Chinese, if they get mad at us and they sell our bonds, interest rates will go up and commercial real estate will go down in value. And home mortgage rates will go up. Well, guess what? These places are selling their bonds. China's selling their bonds. Russia's selling their bonds. Brazil, Taiwan, selling their bonds at a record price. And what's happening to mortgage rates? What's happening to the 10-year Treasury? Going down. All of that noise that you've heard for the last 3 or 4 years about interest rates are going to go up, and for all these reasons, have been a complete wrong. Complete wrong. Keep in mind, mortgage rates for houses and interest rates that impact commercial real estate, they only are key to one thing, and that's a 10-year Treasury. The Federal Reserve only moves one rate, the 1-day 20. You know anybody that's borrowing money for 1 day at 0? I haven't met anybody yet, okay? That's the only rate they control. The 10-year Treasury is what makes the mortgages happen for houses, and it also drives commercial real estate investment decisions. And so when people are saying if China ever sells their bonds, it's going to ruin our market. Well, China is selling our bonds. Why? Because they're running out of money. So is the Middle East. We'll get into that in a minute. I want to talk about oil and gas a little bit too. The bottom line is, if you've been worried about and buying gold and ammunition because you just knew there'd be a day when China sells all their bonds and wrecks our market. Well, China is selling our bonds, and we don't care. They're selling our bonds, and our interest rates are going down. Why is that? Because other people are buying even more of them instead. This is what I just saw a couple of days ago in the Journal. This is one of those small ones, not a headline one. It's not like Beyonce does this or whatever like that. This is way back in the back, kind of back where the obituaries are. Some bond dealer died and whatever. Right under that bond dealer died thing, our Treasury, did you know this? Our Treasury sold 3-month bonds. They're called notes when they're that short, but they're bonds. Our Treasury sold 3-month Treasury bonds with a 0% interest for the first time in history. So when we talk about negative interest rates, oh, that won't ever happen in America. Well, just 3 months ago, we sold some bonds that had 0. So you can just forget this idea of runaway inflation. I've been, 5 years ago, I asked people, it was like, how many of you still use an HP 12C? People that have an HP 12C and people that are worried about runaway inflation. Okay? It's like there's a button on there. If you push the wrong one, it says, runaway inflation in 45 days. Sell everything. Okay? We don't have inflation in this country, and that's the only thing that drives mortgage rates and cap rates and borrowing rates is the 10-year Treasury. And please try not to forget this. I'm going to summarize an entire PhD program in finance here in one sentence. The 10-year Treasury, which is so important to mortgages and commercial real estate, goes up or down by one thing and one thing alone. Janet Yellen can talk all night long, won't matter. Draghi, won't matter. It goes up by one thing and one thing alone, and that's the expected rate of inflation. That's the only reason the 10-year Treasury goes up or down, is that people are worried about inflation, and they're not worried about inflation. They're worried about the opposite of that, which is deflation, and that's why Europe bonds have no interest for 10 years, because people are saying, we're not going to have any inflation in Europe for a decade. We're not going to have any inflation in Japan for a decade. We're not that bad off. The good news is, our country is so much stronger economically than Europe, China, and Japan. We will have some inflation, so I bet our interest rates don't go negative unless your government, these Federal Reserve people, make it happen on purpose. And so we'll just have to see how that goes. Okay, I already talked about this. Talked about that too. The Fed is trying, here's what the Fed's trying to do this year. It'll be interesting to watch. It's just like an arm wrestling match. Their interest rates are at 0. That is ridiculous. It's never happened before. The one little rate that they can control, the Fed funds rate's at 0. They'd like to get it back up to 2 or 3%. That would be kind of normal. Why do they want to get it back to normal at all? Because 2 years from now, if we have another recession, they want to be able to lower it back to 0 and make it look like they know something, like they're doing something. What happens if they can't get the interest rate above 0? They chicken out this year. What if they chicken out this year and don't get rates up and they leave it at 0 and then we have a recession 2 years from now because everybody's tired of buying cars? What do they do then? That's what they're trying to do, is just get those rates up, but darn it, they raised it 0.25% and our stock market went down 12% in a couple of weeks. But don't lose hope. The Federal Reserve is not out of bullets. That's another urban legend. Look, here's what they can do now. You would never believe this. I would never believe I'm saying this, but this is a fact. This is what they can do. We don't care if interest rates are 0. There's lower numbers than 0. There's negative numbers. We'll drop the interest rate down to a negative quarter, negative half. We'll tell all the banks across America, you will loan money or we will charge you 0.5%. You will pay us 0.5% on every dollar in your bank that you don't loan to somebody else. That's what a negative interest rate is all about. That's not going to work. That's their only plan, I guess. But here's the other thing they can do. Remember they printed $4 trillion and mortgage rates went down to 3.7 where they are today? They could do that again. Instead of printing another $4 trillion, there's nothing to stop them from printing another $8 trillion and driving mortgage rates down to 2.7. And then all of America refinances every mortgage on the books at 2.7%. And all of a sudden, every household in America has got another $500 a month in their pocket. Do you know what Americans do with $500 a month in their pocket? They spend it. That's our competitive advantage. There's no place on earth that can outspend an American with money, okay? So that is very possible. And if they get too desperate, they'll print money and buy real estate investment trusts to buy these properties at more than they are now. So this is what's on the table right now. Botox gone bad, playing in the later innings. Here's one other urban legend I want to debunk right now. Some guy will walk up and go, well, hey, we know the Fed never does anything in election years. They don't want to be perceived as influencing an election. Ha! Okay, well, here's the history on that going back to 1956. There's about 5 of those that are in black print, and I X'd them out or lined them out. Those are 5 times when the Fed really didn't do anything in those elections. But you'll notice the rest of them, the ones in red, they lowered rates a ton during an election year, and the ones in green, they raised interest rates a lot during an election year. So the whole idea that they're not going to do anything because it's an election year is just completely a waste of time, not supported by facts. They would like to raise rates several times. They would love to get that rate up to 2 or 3% as quickly as possible. If they could snap their fingers tomorrow and make it go 3% and our stock market wouldn't collapse, they would probably like to do that in a New York minute. Then we've got this energy war thing going on. Here's our buddies there. There's the Saudis working with MIT up in that top, and then down the bottom is a bunch of friendly-looking characters. That's our new buddies in Iran, our new business partners over there. Okay, and these people have declared war on us. Don't get excited about it. Don't apologize for it. It's just a fact. These people have declared war on America's energy business and wants to run us out of business, and it ain't going to work. It's not going to work. I hate to tell you this. Actually, I do. I like telling you about it because it's got a good ending. Here's our another buddy here, Vladimir Putin. Remember last year I said, hey, they decided they're not going to get together and cut production by 3%? They couldn't agree to do that. So what they did was say, okay, well, if we're not going to agree to work together, let's all put a plastic bag around our head and wrap it with duct tape and see who dies first. That's exactly what they're doing. And this guy's dying pretty rapidly. And that guy up there with the MIT lady, he's dying pretty bad too. Our energy business is getting hammered hard. It's going to be a tough year. I've given about 6 speeches in Houston. You want to try something on for size? Go down and try to be optimistic in Houston, Texas right now, okay? Here's the deal, though. These guys, like, we'll just we'll just use Saudi Arabia as an example. Their break-even price is not $10. That's what it costs to get out of the ground. Their break-even price is $96. That's what it takes to meet their social obligation, to pay their welfare payments. They subsidize gasoline. Saudis pay 50 cents a gallon for gas. They use more gasoline than anybody else on the planet because it's 50 cents a gallon. The Saudis subsidize their kerosene, their heating oil, and their water. And that costs them $96 a barrel. Okay? Our producers in America, these people in Bahrain, Saudi Arabia, Iraq, Iran, Kuwait, all of those countries, they thought that if they could just get oil below $80, then Americans go out of business and they win. Well, here's the thing. There's a bunch of people in this country that will go out of business with oil under $80. It's well under that now. Would have gone out of business below $80 because they weren't good businessmen and women. They overpaid for their leases. They borrowed too much money. They're filing for bankruptcy right now. They'll be filing for bankruptcy this entire year. Their cost of production might have been $80. But what you got to know is behind this curtain here, that's why I love doing this job, because I was with one of the biggest consulting firms on earth, and we were talking about this topic, and after it was over, this lady came up to me and she goes, I'm responsible for global lending in the energy business for our firm. And you said, well, let me tell you first what she said. Behind this curtain is $100 billion of private equity money that's going to come in and clean up all of these bankruptcies. Every story you read, the Wichita Eagle, or the Dallas Morning News, or the New York Times, or the Wall Street Journal, every story you read about an oil company filing for bankruptcy, just remember there's $100 billion behind here that's going to buy those assets for 50 cents on the dollar. And what do you think their cost of production is going to be? It could be $45. It could be $50. Keep in mind that there's 4,000 wells all over America that have been punched in the ground and capped. Now, I don't know enough about oil and gas hydrology and engineering to know, but I just visualize having a steel pipe in the ground with a steel cap on it, and you just cap it off. Say, I'm going to pull it out of the ground later, and over a period of time, it gets a little rusty. You know, it's outside, but then when you finally undo it, it kind of rusty, it kind of squeak, goes. Okay? Well, just keep in mind, as all of these companies go bankrupt and this $100 billion of private equity comes in and buys these assets for 30 to 50 cents on the dollar, and these 4,000 wells that are ready to go that cost virtually nothing to open the cap and bring them out. When oil gets back up to 40 or 50 bucks, these people behind the curtain are back in the dance floor. These 4,000 wells start to come out of the ground. Those things start undoing. And then oil doesn't go much above 50 or 60 bucks because the production just goes. How does that fit for Russia if they need $100 a barrel and we turn on the spigots at 50? How do you think that works for Saudi Arabia and we turn on the spigots at 50 and they need 90? How do you think that would work for the Ayatollah? He needs that kind of money too. And we turn on the spigots at 50 bucks. I call that boom shakalaka. In fact, somebody called me that the other day and said, you're Dr. Boom Shakalaka now. I was like, dude, I'm in on that. Good. I'm not making this up. Here's the facts. I don't need to make up anything. This is the best reality show on earth. The whole economy is just the best. I never watch shows with girls in bikinis eating bugs on some island, some reality show. This is so much more interesting than that kind of stuff. Out of this one, the only thing I want you to read is, I already told you about them subsidizing. They're having Saudi Arabia is getting ready to have a garage sale. Aramco is the Saudi family-owned oil business. They're going to put a piece of that up for sale. Why is that? Because they're running out of money. Christine Lagarde with the International Monetary Fund, right down that bottom paragraph, the IMF has warned Riyadh that if they don't cut their spending from where it is now, they're going to be out of money in 5 years. All that petrodollars that you and I have spent since the 1960s, all that money that's flowed over to them, all of that private wealth that they've got, gone in 5 years if oil doesn't get back up above 50 bucks or so. They know it. That's why they're going to try to figure out how to get oil prices up too. And you see, the thing is, this is never going to get back up to 87 bucks. It gets up to 50 or 60, and all these oil companies are just going to start pumping the smithereens out of it again. And they're going to make all kinds of money at 60 bucks. They're not going to care about $100 anymore. So anyhow, nationally, here's why I still think we got innings to go, is that the index of leading indicators of the of our economy still look good. They're hanging in there. No sign of an impending recession. This is too late in the evening, and I think alcohol's been served a little bit. So I'm going to say this, BAA corporate bond spreads haven't widened, okay, but just forget I said that, okay? It's too late in the day. I should have known better. You don't ever say that at past 4:30 in the afternoon. What that means is there's no threat of bankruptcies in our major corporations that have some credit risk. The big deal is consumers are still confident, and 70% of our economy is based on you and me just simply buying stuff. Here's why I don't think we're in the fourth inning anymore, because I didn't really realize this, kind of snuck up on me. Corporate profits in America haven't really gone anywhere since 2011. 2011 it peaked, and in capitalism, when people's profits stop going up, they typically stop hiring people, and when profits fall, they start firing people. Profits in America haven't really gone anywhere since 2011, but the good news is there still seems to be some pent-up demand for hiring. The percent of people in small businesses, the most important businesses in our country, the percent of them saying they're going to hire in the next 3 months is still at a very nice, elevated level. Inflation, let me tell you about that for a second. Inflation is driven by your government printing money, supposedly. Well, as you can see, they printed $4 trillion, but it's starting to go up. They haven't done that. They stopped printing money about 2 years ago. It's actually going to start going down. So all of that threat of runaway inflation is nothing to bet money on anyhow. And so with that said, here is the actual consumer price index, the measure of inflation, and it's right about zero. Your government, the central bank of this country, the Janet Yellen, the Fisher, the Bernankes, what they're worried about when they say we're worried about inflation, if you're more than 40 years old, you go, oh, of course we're worried about inflation. It gets too high. It's trouble. When they say today we're worried about inflation, they're worried about inflation being negative. They're worried about it being too low. And remember what I said about what drives the 10-year Treasury and the cost of funds for mortgages and commercial real estate? What one thing makes that go up or down? The expected rate of inflation. And right now, there is no inflation in this country. So I'm going to close with a couple of things here. An old economist told me a long time ago, every economist should use the words "in conclusion" in their speech to give their audience hope. Okay? I'm 3 slides away. Europe, here's how I would view the investment world as we sit here today. Europe, China, and Japan are printing money, and it's not working. That's really scary. When you're the Wizard of Oz and all of a sudden Toto pulls the screen back and you're discovered that you really don't know what you're doing, that what you're doing isn't helping, and those are the only tricks you got, that's pretty scary. And Japan is right there right now. Their tricks are one-trick pony is print money and buy bonds and stock, and it's failing. Emerging markets, other BRIC countries, Brazil, Russia, India, and China, where everybody wanted to invest 5 years ago. Nobody wants to invest in Brazil, Russia, India, or China. I don't think we're going to have any inflation in this country till a year after oil bottoms. I don't know where oil bottomed. But when it does finally stop going down, we still won't have inflation in this country until it actually starts going up. I think we'll have a couple of meaningless rate hikes by the Fed, another quarter maybe soon, another quarter after that, maybe one by the end of the year. They're hoping to get that up as high as they can without cracking the stock market. And meanwhile, our economy continues to grow at a tepid job growth rate. Mortgage rates unlikely to increase. I'm changing this slide as of tonight. Mortgage rates unlikely to increase above 4.5. I don't think mortgage rates are going to go above 4. If you want to be a genius, an expert in mortgage rates, here's all you got to know. Whatever the 10-year Treasury is, add 1.7% to it, and that's what the mortgage rate is. Right now, the 10-year Treasury is about 2, and you add 1.7, so we should be getting 3.7 mortgages. Okay, so if I had to bet, if you said, Mark, $100,000 bet, and it's one or the other, will the 10-year Treasury be at 3%, or will the 10-year Treasury be at 1% by the end of this year? I would put that bet on a 1% Treasury rather than the 3. And if you add 1.7% to 1, that's a 2.7% mortgage. So we'll see what happens there. Keep in mind, 50-50 chance everything I say is wrong, okay? What else do I want to say here? Oh, about commercial real estate. Foreign pension funds can't buy enough real estate here in America. Everybody's up in the ante. All the pension funds on earth, what do they want to do? Do they want to own more stock? No. Do they want to own more bonds? No. Do they want to own more hedge funds? No. What do they want to own more of? Real estate. Even when it's at record high prices, we want to earn more of it. That's why I'm still in the game. Sounds like a Viagra commercial. I've got to stop saying that. Still in the game. I hate that commercial. I don't even know how you watch football. How do you do that with your kids anymore? It's like, hey, Dad, what's up with that? When's the time's right? It's like, just shut up. Don't watch a football game. Turn the sound off. Here's my black swan. Some people will say, hey, what's the black swan, pal? The black swan is something that you just can't predict. It's out of nowhere. It has a big impact on you. It's like a bolt of lightning. Get struck by lightning on the number 1 tee. You're thinking you're going to play golf, and then you're not because you got struck by lightning. That's a black swan. You can't predict it. My black swan is if Vladimir Putin runs out of money and freaks and decides to figure out some way to take oil production offline. He can't make you drive your car more. Vladimir Putin cannot make you use more oil or gasoline. But what Vladimir Putin could do is alter the supply side of things. And here's how he could do it. He would just blow up all of the production in Iraq and Libya overnight. And he could do that. And what do you think the price of oil would happen if you read in the Wichita Eagle tomorrow? The headline would be about this high. Unless the Shockers win, they'll be about this high. Shocks beat most state, man. We thumped them, man. But oil would just go through the roof. And if he gets desperate enough, he'll do that. I guarantee you. And here's the thing about it. If I was him, and I know how they operate, because I just read. I don't know. I'm not a Russian. I'm not with the CIA. I just read, okay? I read history. And here's how you do it. You go over there and simultaneously blow up all the production in Iraq and in Libya at the same time, and then take your worst refinery in Russia and blow it up too, and then blame America for the whole thing. Okay? That's how you do that over there. I don't think that's going to happen, but that's my black swan. And the other one I was going to say, I may change it. We may wake up one of these days and find out that our central bank doesn't know what it's doing. That our central bank's one-trick pony of lowering interest rates below zero, of printing money, we may wake up and find out they don't know what they're doing, and their one trick doesn't work. That would be a difficult time for every stock and bond market on this planet. We need to keep our fingers crossed that doesn't happen. But I'm telling you, I'm worried about it. It's not working. And that seems to be all they know what to do. So just keep that in mind. Thanks so much for your kind attention. Nister, thanks for inviting me back again. Go Shocks. I hope they win the game tonight. Thank you.